I think I'm live. Yeah, live. It looks good.
Let me mute the streams before we
Oh, yeah.
get into it. We get like triple noise.
Okay. We're all good.
There we go. Got that one. Perfect.
Cool.
Everyone that's watching, we're trying to stream on multiple different streaming services on multiple different channels.
It's a challenge. It's a challenge.
Yes.
I think we're there.
I think we're live. We are live on your channel and we are live on my channel. So
yeah.
Perfect.
Cool. Yeah, I've just said someone's just said to me that we're running late. I think we're there. We should be live.
Yeah, we were trying to figure out some technical difficulties. I'm not a technical person.
You're more of a whiz than I am, so put it that way.
I try my best. But sometimes it goes better than others. But yeah, everyone, thanks for joining in. I'll introduce myself first. My name is Colin, decade investor. For those of Hayley's channel that don't know me, I am on Twitter, here on Instagram, of course, and on Instagram. And I talk everything and all things investing. I'm US based, so my content is 98% US based. I try to reach out to my friends over the ocean and the friends upstairs in Canada, but I'm not super knowledgeable on like the intricacies of the rules and the laws, but the high level stuff I like to talk about. Yeah, I just share content every day about how to invest, how to get wealthier, and how to have fun in it too, because it can get boring, but how to make it fun. So that's me.
Yeah, for sure. And you don't have to know the intricacies. The overarching themes are the same, wherever you are. But yeah, thank you for that for my viewers, and I'm sure they have come across your channel or seen you on Twitter. You're very active on Twitter, aren't you? So I'm sure. But
maybe too active.
No, never. All the stuff you share is super important and interesting. So people from Colin's channel, you probably noticed by my accent that I'm not US based, based in the UK. I'm primarily on YouTube. My username is just Hayley Eich Finance. You can see, I guess, on the screen now how to spell my surname. But anyway, yeah, primarily UK based investing topics, dividend investing, growth investing, a bit of everything, general stuff as well. Yeah, started investing properly in 2020. So still kind of new, sharing my experience as I go, trying to encourage more and more people.
Yeah, I love it. What is like, and feel free everyone in the chat to like just ask questions and we'll answer them as we go. But I'm curious, and we can probably both share our stories for both of the viewers. But how did you, like you said, you started in 2020? So what was like that? Was there like a defining moment where you were like, all right, it's 2020, I need to invest, like something's not happening? Or was it like what caused you to start investing in 2020?
I don't think it was necessarily like the 2020 thing that was the trigger point, if you will. It was more just over the years, I had been quite interested in personal finance, interested in saving, was doing okay at that. But it got to the point where it was like, okay, I don't see how saving this money is going to one day lead to financial freedom. The numbers didn't make sense. So, I was looking at other ways that I could use my money, came across investing. I knew that my granddad had invested his whole life and that had led him to like a pretty good position. So there was that influence as well. So I just thought, you know what, I'll give it a go. And honestly, I was literally Googling how to invest, came across Vanguard, came across some ETFs and just got going. What about you?
Yeah, it's to me. So I started at 17, and
nice,
it was,
well done.
Yeah, it was like a long story short. Basically, I was mowing lawns in the summer. I live in the Midwest, so we have a few months of the summer that we can mow lawns. So I was mowing lawns, I had a bunch of cash, and I did not like the bank. But I didn't like the bank not because they paid bad savings rate. I didn't really.
This is why you like crypto.
Yeah, I didn't like the bank really at the time because I had a debit card. And when I didn't have cash, I didn't know how much money I had. So I was like, I don't like the bank because I can't see how much money I have, which I didn't realize you could just go to the ATM and like check your balance. But, so I was like, I have to have cash. But then I was like, all right, I need to figure out where to put this cash to like do something because, I'm just holding it. And I like, as any maybe teenage boy does, go on the internet. I'm like, how do you get the fast car? How do you become wealthy? How do you become rich? Right. And I see like talking about investing and all these things. So I kind of, 17, I get into investing, learn a really good lesson at 17. which is invest in what you know, because I did the opposite and I just picked these like 4 random stocks. One was like a penny stock, so much so that was like $0.0000001 or
Is that even a penny? What is that?
yeah, it's like a hundredth of a penny stock.
Yeah.
And I learned really quickly that that is not the way to go. And so swapped into learning about like ETFs and the
Yeah.
S&P and all this stuff. And then since then, just been consistently adding to my portfolio. Nothing like crazy, just whatever I can afford that month. I'm going to put into my portfolio and then just let compounding take over.
Yeah.
And looking back, like 2020, I remember I had just graduated college in 2019, December. So it was like 3 months before the crash of the market. And I had just got a new car. So, and I was like paying it off as fast as I could because it was like 8% interest rate. So I paid off the car in like 3 months, but like I paid it off. And then it was like April when I got back into the market. So it was like kind of good timing, got back into investing. But I was like, shoot, I could have taken the money. It was like, $7,000 I had left to pay off. I was like, I could have taken that money and put it in the market. It would have, but hindsight's always 2020. So
yeah, and I literally, this not the same thing happened, but because I was so new to invest in when 2020 happened and the market was crashing, that I didn't know the lesson about, be greedy when others are fearful, keep investing when it's dropping, there's opportunity. I didn't know any of that. So for me to be a beginner and then to see the market drop, I just thought, do you know what? This isn't for me. Maybe I've invested in the wrong things and actually this is my wake up call, or I just shouldn't invest. And at that point, I'm glad to say that I didn't pull out all my money. I left it where it was, but I equally didn't add to it for a long time. And it's now we know what we know, right? We know what happened in 2020 and what could have been made from that. It's so annoying, but lesson there, and I won't do that again.
yeah, I think that's the thing about that. Like I try to get my message across to people about investing is like mistakes happen, right?
Yeah.
And but you have to learn from your mistakes. And so like you just said right there, right? Like good thing you didn't take your money out, you left it in there, but you didn't
There's
add, but at
some,
least
yeah.
yeah, you left money in there, but now you learned your lesson. So if there's a time in the future when we have a crash, which we will, right? They happen like every 7 years on average or
I'm
something. So
excited.
yeah, so like that is like now the next time it happens, you're like, all right, I'm not gonna take out my money. I'm not just gonna keep it in there. I'm actually gonna add more or like keep adding. And it's good that you like I learned my lesson with $400 to invest in what you know, right? That lesson cost me $400. I'm glad it cost me 400 and not 4,000 or 40,000 or 400,000, right? And so it's like those lessons, as much as they suck, like when like the market crashes, it's like, oh, my money's down 20%. But it's good to learn it when you're just starting out, when you're just starting investing, because you're probably you probably have the least amount of money you'll have.
True.
But as it goes over time, you get the next crash 5 years from now, whenever it is, you're like, all right, now I have, 10 times the amount of money and I'm going to keep it and actually buy more because, this crash is an opportunity versus like this crash is, oh, I did something wrong.
Yeah. And I think as well, it felt so different because we weren't used to having a pandemic, right, either. So there was that whole new thing. And I was thinking, okay, maybe this really is the end of the stock market. I just didn't know. But yeah, definitely a lesson for beginners.
Yeah.
Don't
I think
panic when it drops.
Yeah, exactly. And I think like that mindset, like that question you said right there, like, is this the end of the stock market? I
Yeah.
don't think like even for me, right? Like there was a inkling in my mind of like, what if this is the end? Because I think, maybe everyone doesn't think that, but I'm optimistic about the future, but I'm also realist about like,
Yeah.
maybe something is. And so, but to me, it's like if I look back from 1929 in the US, you had 1987,
Yeah.
you had 2000, 2008. Like go through all that stuff, and the market is still was still hitting all-time highs in 2021. Then it's like, what can bring the market to its knees? And it's like, who knows? We don't know, but look back,
An
it's like,
apocalypse.
yeah, you're right. Like, and minus
The
some
end of the
crazy
world.
event. Yeah, right. Like minus some crazy event, like the stock market has been through a ton and is
Yeah.
still doing well. So it's like, is like if you're not bullish on people, that's how I say it. Like most of my money's in the S&P, which is at VUSA. Isn't
Yes.
that equivalent? Okay.
VUSA, yeah.
Okay, so VUSA, right? So most of my money's in the US VOO, which is the US S&P 500 by Vanguard. And to me, it's like if I'm bullish on people like waking up every day to get better, like companies try to get better, technology's trying to get better, people are trying to grow, then the economy is hopefully going to grow. There'll be some hiccups along the way, but like to me, I'm bullish on the growth of those companies. So that's how I just see it.
Yeah. And I think that's a really good point. Like if you're a beginner and you're really being affected by crashes and you're not able to be strong psychologically yet, then a really good thing to do is actually pull up the chart and actually mark out every time it's gone down and then see where it's gone from there. And then think to yourself, if I had invested during this point in time, not trying to time the market, but just carried on investing, where could that money have then gone? For me, that really helps because then I'm like, if this is happening again and it's recovered and it's going to recover again and again and again. And this is just an opportunity.
Yeah, I have on my stream, I have like I'm sharing my screen and we look at like the crash of, well, I mean, you go back here to 1987, like it's a little blip in the S&P in the graph. You go back to 2000. I mean, it's still a down year for a couple of years, but it's recovered. It recovered in 08. It recovered in 2020. I mean, 2020 was like one of the fastest recoveries ever, but it's recovered. And it's like, to me, you should see it as an opportunity. I know it's easier said than done because like it's not fun to open your account on your phone and see my 10,000. Yeah, like my 10,000 is now worth 8,000. Like that's not fun. But if you can change like the view on that of like this is good, like this is actually an opportunity, then it can help you hopefully kind of stick through it.
Yeah. And I actually get happy now when I see things fall. Like I honestly, it's not even like I've managed to train myself and understand enough now that when I see things drop, it makes me happier than seeing them go up because personally I'm in my growth stage of investing. Therefore, I want to accumulate as many shares as I can. And how do you do that? Well, if they're cheaper, you're going to get more shares for your money. So perfect. So Colin, how do you feel about, obviously we can't predict the market. Like we always say that on both of our channels, but how do you feel about 2023? Because the back end of 2022, I think I felt a little bit differently than I do now about 2023.
Yeah, like in just the market, like how the market's going to do, like a prediction per se. Yeah. I mean, we've seen, well, we're almost 2 months into the year and the market, is up like 18% or whatever it is, right? Like the overall markets are up. So to me, I don't see how this rally continues because the signs of like the economy as a whole and like the Fed still, the US Fed still has to raise rates. Like their goal, like if you look at it at just a numerical stance, the Fed has mentioned millions of times, we want to get to 2% inflation, right? In the last read of PCE, core PCE, which is what they use, was 4.4%. So we're still 2.4% greater in inflation than where the Fed wants to be. And we have data coming out this end of this week that will get us the next month or for the last month. But that's where it was last read, 4.4%, and they want 2%. So it's something has to move, right? So probably going to raise rates, and that, as we all know, rates affect how the market does because if borrowing money costs more expensive, whatever. I don't see how this rally like continues, and I don't know, was last June in 2022 like the bottom of the market? I don't know. My friend Malone's in here, and he always says, no one rings a bell when the market's at the bottom. We never know. We could have already hit the bottom. Maybe we have the bottom to go, but I think it won't. If they lower rates for the U.S., I don't think it will be until the latter half of 2023, towards the end. And so I could see the market like 2020 into 2023 have a nice little rally like that lasts a little, like that's a real rally because the rates are being cut. But short term, like the next 6 months, I don't see how the Fed raising rates and that was like that the market's going to continue this run up. So, but with all that being said, like Hayley said, it's a prediction, so we don't know. Whether the market goes up or down, I buy every week. So I'll just enjoy the market if it's up or down.
Put it this way: if we knew, we probably would be on an island somewhere, maybe.
Yeah, exactly. If that's what I always tell people. Yeah, I was like, if I knew the market was going to go up or down, then I would not probably be streaming. I would be,
Yeah,
on a beach somewhere.
exactly. But I know this is not probably what everyone wants, but for me right now, I would quite like to see things go back down. Things have been okay. Tech companies in general, tech stocks, they've been doing quite well recently with like the reopening of China. Their supplies are better, whatever. But I'm looking to start introducing some growth stocks into my portfolio. So for me, and actually the other half of my portfolio is Dividend UK stocks, which again have been doing really, really well. So I actually would quite like them to start dropping so I know time in the market, blah, 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 but just so I can have an opportunity to actually pick up more shares. But we'll see. We'll see what happens.
Yeah, no, that's and then in the UK, correct me if
Yeah.
I'm wrong, but if you are in the UK and you buy US stocks, it is a 15% dividend tax, right?
Yeah, it's called a withholding tax, but exactly
Okay.
that. It's a 15%. So if I were to buy, I don't know, Coca-Cola, I would pay 15% on the dividend. Yeah.
And then, but are you then taxed on that like at your income tax too, or is that just like do they take the 15%? Let's say you get $1 for ease of math, a
Yeah.
dollar dividend, 15%, you get 85 cents after the
Yeah.
withholding. Then do you pay taxes like on that income, or is that if you're is it
No, no,
held
no.
in like an
So
ISA or something?
exactly that. Yeah. It depends what account you hold it in. If you're going to hold it in an ISA, which is the tax efficient account here in the UK, then no. If you were to hold it in a different account where we would have to pay taxes, then yeah, absolutely, you'd be sort of, I guess, taxed twice.
Like a
But
double tax?
I haven't done that, so I don't actually know the true implications of that. But yeah, for sure, tax efficiency is very important with investing.
Yes, yes. Hayley does have a YouTube channel. Someone asked me, and a Twitter. Her YouTube channel. So if you're on my stream, I have the title and I tagged her in the title, so you can just click it, I believe, and you should be able to go to it.
Yeah,
And then her
same as mine.
Twitter, I'm not sure. What's your at? Is it just your name?
I think so. It's a really good question. Twitter's very new to me. I think it's just the same as my YouTube, pretty much.
I'll pull it up on my stream. Oh, it's at Hayley Invests. That's
Oh,
what it is. Yeah,
well,
there
I
you
just
go.
lied.
Yeah.
I now know my Twitter username.
Yes, I pulled it up on my stream so you can see her stream. There we go, or her Twitter.
Yeah,
That's the.
Oh,
Oh,
go on. Sorry.
go. No, you go. You go.
I was going to say, someone's just said, let me put it on the screen. Let's see if I can do this. Let's see. This is a good test. Basically, someone was saying that if you don't sign the form, which is the W8 Ben form, I don't know if I'm saying that right, but then you get taxed 30% instead of 15 on
Oh,
US
wow.
stocks. Yeah. But the accounts are pretty good at reminding you to do it. So
Dang.
look, there you go. I managed.
There we go. I see it. I see it. We're learning.
So much going on.
Yes, I know. We have like tools. Everyone that's just joining in, we have like 2 separate streams. She's streaming on her channel. I'm streaming on mine, and we're using 2 different like streaming softwares. So it's a full production. Yeah. So
go on.
No, you go. You go.
I was just going to ask you about, like, I know your strategy pretty much, but people that maybe haven't seen you before, I'm sure that there's none. But anyway, you've just mentioned that every single week you buy. That's like your go-to schedule. And you, correct me if I'm wrong, but you buy a multitude of different ETFs, primarily VU, but you also invest into other ones. Now, I don't know everything you invest into, but is your strategy to try and cover as much of the global market with them ETFs, or do you like to be more concentrated in the US?
Yeah, good question. So, every Friday I buy 6 ETFs, ranging different dollar amounts. Most of my money, 50% of my money I buy every Friday goes to VOO or VOO. I have it tattooed on my leg, so I have to,
Do you actually?
Yeah, I do actually by
Oh my
rule.
God.
I can show later. It's on my knee.
That's amazing.
But so by law, I have to do 50%. No, I'm just kidding. But I do 50% into VOO, and then the other 50% goes into 5 different ETFs.
Yeah.
QQQM, which is the NASDAQ 100. So it's a little tech focused. About 50% of the ETF or that ETF is tech. So pretty tough tech focused. Then I buy a different ETF called QQQJ, which is like you have the NASDAQ 100 and then you have like the NASDAQ 101 and 200. So I get like the 200 largest companies in the NASDAQ. And then I buy an ETF called VXF, which is a Vanguard fund that is basically everything but the S&P 500 in the
Okay.
US. So I basically build my own like US ETF. And then I buy VXUS, which is the international market.
Yep.
So I buy everything but the US. And then I buy SCHD, which is a dividend ETF. But so for me, that there's do I focus most of my investments in the US? Yes. Like if you look at my investment portfolio, right, it's mostly US, like, S&P 500, Dividend, which is US companies, whatever. But I do have small exposure with VXUS, which gives me total international. But on top of that, like Apple does business outside the US, right?
Global.
It's incorporated in the US, but it does business outside. Microsoft, insert any company. Most of them are international companies. So to me, while the company might be incorporated in the US, it does business outside the US. So in a loose way, there is international exposure via US companies. So that I don't buy, like, other than VXUS, it is technically US ETFs just by nature. But do you do like mostly UK, or do you have some
Actually,
US?
no. So right now, my largest holding is the UK equivalent of VU, so VUSA. That's my largest holding. Then I have UK dividend paying stocks. And I also, from my last year's account, have a global all cap ETF. So in its name, global, all the different cap sizes. So that gives me exposure, to the emerging markets and whatnot. But yeah, like I said, moving forward, I'm going to be adding to them positions, but also adding a few more growth stocks in there and some US dividend stocks as well. But I have to kind of like, I see it as I need a large enough position in those companies to make it worth that 15%. Otherwise, it does still make sense, but it's going to become costly. So I'm not going to go and add like loads, because I already have exposure to a lot of these companies, but maybe a few that I have perhaps stronger conviction for, I might start adding more of that in.
What do you have, do you know off the top of your head, like, percentage of ETFs to individual stocks, like your portfolio?
Across the two portfolios, I don't know the exact percentage, but I'd like to say it's probably upper 60s to ETF.
Yeah, that's about where I am too.
Yeah.
Now, I know some of my people in my stream are against this, but I like it. Crypto. Do you own any crypto, or do you?
I do. Yeah, I'm all for crypto. I'm all for crypto. I will never claim to be someone that really understands crypto to a very intricate degree. I know what I need to know to be able to invest into it. And I do think it's the future and, all of that stuff. It's not my largest holding, but equally I have enough in there for it to matter to me. I do view it as maybe a riskier position just because it's crypto, I guess. But yeah, and you invest every week into crypto as well as your ETFs, right?
Yeah, not as a consistent schedule
Okay.
of like DCA, like I do with just because it's a little bit different the way I go about it. I have to manually do it, so sometimes I forget. But
Okay.
yeah, I try to buy crypto, but for me, I just mostly buy Bitcoin, like 98% Bitcoin. So
Yeah.
I don't do like the other stuff. I do have some other stuff, but
And do you have a cold wallet?
yeah, I
Have like
do
a ledger?
actually.
Yeah.
Yeah, yep. I got a couple. So
Oh, a couple. Look at you.
yeah, I'm trying to be secure, trying to be
Yeah.
secure. So I'm actually on your stream right now, and there's a question from a guy that's on my stream that came to your stream because he always asks me this question. But
Okay.
he says, Hayley, do you count your car, your house, and your jewelry in your net worth, or any of those?
Okay. Jewelry, no, just because I don't have any expensive jewelry. So there would literally be no point, it would be like such a low amount. I rent. So again, not owning a home, I guess the answer would be no. We, rent versus buy is a whole different conversation. I eventually want to buy, just not right now. And car, I guess so. But there's also liabilities to having a car as well. The car that I have is not, this also feeds into the lifestyle inflation topic, but it's not the newest car. It's been paid off. It doesn't take much petrol, gas, whatever you want to say. So I wouldn't say that those things actually really increase my net worth in any way, just because they're not substantial enough for what I have right now. But it's a great question.
Yeah, we talk about this occasionally on my streams. About like, what do you include in your net worth? And I saw someone tweet the other day about you include your car in your net worth because by definition, a car is an asset. And by definition, net worth is asset minus liabilities, which sure, like I don't disagree with that, but I don't include my car in my net worth because for me, like you mentioned with yours, like my car is paid off.
Yeah.
I plan to drive it until it goes
literally needs replacing.
Exactly. And so for me, like it's more of a, like if it's, let's say it's worth, $8,000 USD, right? For me, and then next year it's gonna be worth 7,000 USD, and then it'll be worth 6. Like to me, there's no point, and it's almost like at that point it's just like an ego boost of like, oh, my net worth is now 7,000 more than what it was before, but like it really isn't, because I mean it is technically, but for me, I want to see like if I had to liquidate everything, here's what I could, and that's why I really only include my stocks. But I do include one piece of jewelry, which always gets the question, but about with this Fast Eddie who asked the question, but I don't include my car. I don't know. That's just a personal thing. I think.
Yeah. And it's a big liability in a way as well. Like if anything goes wrong, cost. And if you included it in your net worth, right, and you're really, really detailed about it, you're going to have to edit that all the time. Every time you have a service, every
mile you drive it. Yeah. Like
literally,
do you guys kilometer? So every kilometer, right, that you drive it.
Miles, whatever.
Kilometer,
whatever. We'll do whatever.
Like every inch you drive it, it technically does go down in value. So it's like you'd be sitting there on your spreadsheet. Okay, now it's worth 8,000. Now it's worth 799 or 7,999.
Yeah. You know what? I think something we have in common is how we both don't like lifestyle inflation. Like I couldn't what's the word? Be okay, sleep at night, whatever, knowing that I'm spending so much money and I'm just keeping up with the Joneses. Like I just don't think it's a good strategy at all, but so many people do it. They get a high paid job. They don't save the difference or invest the difference. They buy a nicer TV or a new phone every year. I don't know. It's just, what are your thoughts on that?
Yeah, I think the lifestyle inflation sneaks up on a lot of people without them realizing it. And by the way, everyone, if you're watching the stream, no matter what channel you're watching on, do hit the like button. It is free. We don't have any inflation on the like button. It always is free. I think a lot of it stems from the keeping up with the Joneses. And so when people get a raise, the first thought is, what now can I afford versus, oh, I should maybe just invest this, which it isn't to say, let's say you get a $10,000 raise or a 10% raise, whatever. It's not like invest all 10% and don't enjoy life. It's like, well, maybe invest 5% and then you can spend the other 5%, but like increase your investments a little bit more, whatever it is. And so I think the lifestyle inflation sneaks up on people and they don't realize it as much. And then at that point, like you mentioned, it's like, oh, then they got the new TV and they get the new this and new that. And next thing you know, it's like end of the month comes and they got an extra, $500 that month in the raise, but there's still, there's no money left over because that 500 went to the new TV or the new car payment or whatever it is.
Yeah. And increasing your income is by far one of the most important things you can do for your net worth, for sure. But you can also argue that no matter what your income, unless it's crazy, obviously, there's always exceptions here. If you're still not smart with that amount of money, you could still be not rich, not wealthy, not financially free. I've seen so many people that bring in so much money, yet actually, apart from a flashy car, you know, they're just spending it as it comes in. They're not investing it, they're not saving it, they're not buying assets at all.
Yeah, I think a lot of people hear that and they say, "Oh, well, if I was making $300,000 a year, or
Yeah,
insert a high income to that person." If they're like,
yeah,
"Well, if I was making that much money, I wouldn't do that," or "That's not possible." But
yeah,
I've seen and talked to a lot of people that know of or was that person that was
yeah,
making multiple six figures a year, and they were in the month with nothing, like
yeah,
it was going to something. And one of my friend, he tweets this occasionally, like income, extra income won't fix your bad spending habits. Like when
yes,
you make more money, it's not like immediately, oh, now I'm going to start investing because it's usually now I have more money to spend. And
yeah,
one of my like, have you heard of The Psychology of Money?
yes,
That
yeah,
book. So
yeah,
Morgan Housel has a blog, and in one of his blogs, he talks about this all these different things. And one of the things he says is when people say, I want to have $1 million,
yeah,
it really, what they usually mean is I want to spend $1 million, not actually have $1 million. And I think most people are in that, like, they want to have a lot of money, but not because they want to invest money. It's because they want to spend more money, right?
yeah,
Which is, and that's where you can see people that make, $50,000 a year can end up at retirement with more money than someone who is making $200,000 a year, because it's not
yeah,
about, having a bigger shovel, 200,000 is bigger than 50,000. So it helps in investing, but if you don't use it right, then it really
yeah,
doesn't matter in the sense
yeah.
of investing terms.
Yeah, and some people as well say, again, circumstances are going to vary, but some people also say, "Oh, I wish I could invest. You know, I see the benefit of investing, but I can't afford it." And for sure, some people literally can't afford it, and feeding their families is way more important. 100% understand that. But for a lot of people as well, I don't think that they realize that investing is not just for the wealthy. It can get you wealthy. You can start small. You can find find a commission free platform that's not going to charge you a lot of money, and you can literally start putting $10, £10, whatever, in, even every month if you need to, and just get started and continually and consistently do it. And actually, maybe that amount won't make you a millionaire in the next 10 years, but you'll be in a much better position than if you spent that £10 on an extra coffee a week, whatever it is.
Yeah, I totally agree. I think a lot of people assume investing is just for the wealthy, like you mentioned, and
Yeah,
it
I
used
used
to
to
be
think
really
that.
tough. Yeah, and it used to be really tough too. Like when I first started investing, I used to pay, it was like $5 or $6 per trade. So if I
Ouch.
invested
Yeah.
so if I put $100 in and I bought like VOO or whatever, I'd really only be able to invest like $95 because five
Yeah.
would go. Now, like you mentioned, commission free, at least in the States, is like super, like if they don't have it, people don't use it, right?
Yeah.
Like commission free
Yeah.
is like, which is good. And yeah, just like one of my favorite, the analogy I like to use is when you go to the gym, right? The first day you go to the gym, you're not gonna be able to do the most weight, right? You're just starting out. You're not gonna be able to run the most miles, whatever it is. But you lift a little bit, right? You do some curls, you
Yeah.
push ups, whatever it is. You start with something. Just like with investing, like you
Yeah.
mentioned, $10, £10, whatever it is, just start.
Yeah.
And then over time at the gym, you get a little bit stronger. So now you go from the 10-pound curls to the 20-pound curls, right? Or the 15-pound curls. Well, just like with investing, maybe you find a way to make extra $5 a week. Maybe
Yeah.
you find somewhere to cut back $5 a week so you can invest from 10 to 15. And then, over time, it gets bigger and bigger,
Yeah.
but so also does your portfolio. Just like at the gym, the guy that, or the girl that's really strong that you want to look like, right? They didn't just do that after one day. It took them years, right? And the same with investing. And that's the like paradox of investing is it can really help you build wealth, but it takes time, and most
Yeah.
people are not
Don't
patient.
want to put that time in, no. And if there's a
Right.
means, there's a way. Like you said, if you want to invest, you will probably find yourself a way to cut back on however much you need to, or make more money, or whatever it is. I've got another question for you.
Yes.
And I think this is something that we've probably both had people comment on our videos before. And that is some sort of similar to the fact that we're both quite young and we both have dividend stocks. Why on earth do you invest in dividend stocks at such a young age? I'm sure that you've seen that comment. And what's sort of your reply? I imagine it's very similar to mine, but
Yeah. So when I first got into like investing, and then I was like, oh, these dividends are cool. Let me check it out. And I got into like really, really high yield stocks.
Okay.
And I was like, this is cool. I'm getting paid. And then I started to learn more, and I started to realize that while that's cool, there's some sort of sacrifice you're probably making. And like, for example, just one of the stocks I used to buy was AT&T, or T is the ticker, which is like a telecommunications company in the States. And they have a high yield, but their share price like didn't even grow, or it was like negative growth, right? Like I was losing capital. So I'm like, okay, started to do some research, try to understand, and realize like that's probably not the best strategy over the long run, especially if you're young. And so I stopped like yield chasing, and I started like investing in good companies that if they pay a dividend, like that's just a cherry on the top, right? And so like Apple, Starbucks, Home Depot, right? They pay dividends,
but you'd want them anyway, even if they didn't. That's the point, right?
Exactly. Like to me, I dividend invest, and like I enjoy that. And like, I mean, most of my money's in VOO, which is not a dividend ETF specifically, but it pays a dividend. So like, in a way, everyone dividend invests if you know, because like
that's true. Actually, I'll
right,
throw that back next time I get the comment.
like I mean, technically everyone dividend invests, but I think like the term, especially like on social media and Twitter, like dividend investor gets thrown around loosely because like I just mentioned, everyone is a dividend investor unless they're buying like only Tesla that doesn't pay dividends, or like only Amazon that. So I mean, but most people, if you just buy VTI or VOO or VUSA, right, like they all pay dividends. So by nature, you're a dividend investor. But for me, it's less like I focus on, like I just mentioned, good quality companies that I believe will be around for the next 20, 30, 40 years. And if they pay a dividend, cherry on top, I'll take it, reinvest it, and buy more shares with it. But definitely not a fan of chasing high dividend yields just to get the high dividend payout now, but your money doesn't grow and or loses money, which is not like, no, to me, like that doesn't make sense. Like I don't get like, you know, the fund QYLD that everyone talks about? And they're like, oh, I get a 13% yield, right? But then if you look at the share price of QLD, it's like negative. And it doesn't understand to me because they're like, well, we want cash flow, which I get that. Like cash flow is important, but I don't like, no one's goal to invest is to invest to lose money, right? Like I don't put my money anyway. right. Like your goal of investing is to hypothetically, like most people's goal is, I'm sure everyone is to grow your money.
Grow money.
So so it's like when you see QYLD, you're getting a 13% dividend, but your capital is going down. Even if you're reinvesting, could it be growing? Yes. But like over the long run, at least historically speaking, you're going to vastly underperform just buying like VOO, which doesn't pay a 13% dividend yield, but your money is growing. And unless you need that cash flow now, to me, I'm better off just buying, you know, I'll sacrifice the high yield for long-term growth.
Yeah, I think it's similar for me as well. I find dividend investing a motivating strategy. It's very nice to see the dividends come in and then to reinvest those dividends and see your shares accumulate in that way. That's really motivating and really nice. But I would never pick a company based on the fact that it pays a dividend. And equally, I've seen people question like having non-dividend stocks when I've said that I like dividend investing. And I think it just comes down to, I just want to invest in good quality ETFs, good quality companies. If they pay a dividend, fantastic. I will reinvest those dividends and whatever. But I'm not going to seek out the companies with the highest yield because I know that always pretty much means that there's something going on there, that they're having to advertise themselves through this high yield. Like, why would how can a company sustain paying an above 5% yield and grow the business? They probably can't.
Yeah, I agree. Like, I think you said that in the middle there perfectly, is like, if the argument of that is, you know, you're a dividend investor, then you wouldn't like, and if you're buying just for dividends, then like, well, then you wouldn't be able to buy Starbucks. You wouldn't be able to, because they all pay a dividend. But I still think Apple's a good company. It pays a dividend. The yield's less than 1%. So it's not like I'm going to just like, you know, retire off of Apple with $10,000. Like, it's just not going to happen with the dividend. But you're investing into good quality companies, and just by nature, it pays a dividend. So it's just by nature, it is a dividend stock, but it doesn't mean you're investing for the dividend. It's just you like Apple and it pays you a dividend. So I'm not going to say no to the dividend.
Yeah, exactly that. It's just it is funny to see. It's funny to see the comments, and I know I do agree as well that if I was only investing in dividend stocks, that I might be missing out on some of the ones that have a higher chance of growth. But I'm sure you agree, you have a lot of those big tech growth companies just by having an ETF as well.
Yeah, I mean, if we look at Apple, like Apple in the last 5 years is up 250%.
Nice.
And so it's like that's that pays a dividend.
Yeah.
So but that's still really good growth, like 250% in the last 5 years when the S&P is like up like 50%. So which is still good. 10% a year is good. So, you're seeing the dividend doesn't necessarily mean it's a bad company either. So
Yeah.
I don't know. I never understood that argument either. I do agree with
it's
those people
confusing.
that say like, don't buy high yields. I'm against that.
100% agree with that. Yeah.
But yeah. So I a question for you. Oh, do you have
no, go on. Yeah.
So what is like your response and or just like when people say, because like I've seen your videos, you talk about hey, here's my portfolio, or here's investing. If you invest this much over this many years, you could have this size portfolio or whatever. But then you always get that comment, or at least I always get the comment of like, well, in 30 years, $2 million will not be what it's worth today, right? And so like this is whatever. What is your thought or like response or take on those kind of thoughts that people have?
I think with those videos, I do them as a way to interest people into investing. Like, this could become this. I am by no means saying that if you invest this exact amount, then in this exact number of years, you will have this pot. I promise you. Like, no way. That is not what it is about. And of course, you have to consider the inflation. You have to consider the fact that 2 million today is not going to be the same as 2 million in 2 years, 10 years, whatever. But it's something that people can, like these online calculators, right? The compounding interest calculators, they're not going to be 100% accurate. But what they can do is they can make people see the power of compounding. And it's only when you actually start looking at the power of compounding that everything clicks in terms of investing. I might be getting off on a tangent here, but I'll bring it back.
You're good. You're good.
Because when you start investing, it's really, really hard to see an amount of money, or £100 a week, whatever, actually become something much bigger. Because you could look back in a year and your portfolio is up £200 and you're thinking, well, these people are lying to me. There is no way that I'm going to be a millionaire in 30 years when I'm gaining £100 a year. But it's the power of compounding that actually manages to get people to that point. And I've actually seen Phil, your comment. Where is it? Here you go. I'm putting it on the screen now. Compounding, the magic word. And it is so true. So true. Once you understand what compounding means in terms of investing, I promise that you'll be way more interested in being consistent and doing it for a long period of time. But yeah, those videos are fun. They're not 100% accurate, but my response is, well, take it for what it is. Go and do your own research. Go and look at your own calculators and just use it as a way to motivate yourself more than anything. Is that similar to you? Like,
yeah, my thing is like, that those comments kind of make me giggle because it's like, most of the time people 99.9, probably 100%, honestly, people that say that don't have $2 million. So like, they're just saying that to cause whatever. But my response to that is $2 million in 30 years is better than $0 in 30 years, right?
It is.
Whether the buying power is 50% less, who knows what it's going to be, right?
Yeah.
Let's say it's, let's say in 30 years, $2 million or 2 million pound, whatever currency is only going to really buy you $1 million of stuff. Well, $1 million in 30 years of buying power is better than $0 of buying power in 30 years. So it's like, what is the alternative? Is it, I mean, that could be a whole different conversation, but like, is it what is it? Is it not investing at all? Because 2 million in 30 years won't buy me a hamburger at the McDonald's. That, you know, some of the comments I get, it's like,
Oh God, I hope it will.
yeah, right. Like, so for me, that's my take on that is
Yeah.
what is like having 2 million in 30 years is better than zero. Having $200,000 in 30 years, although buying power might only be 50 grand, whatever,
Yeah.
is better than having zero. But because you're just like, well, I'm just going to spend everything I make because what's the point of investing? Like the alternative is don't do it.
Yeah.
Then and that argument to me makes no sense because it's like
True.
having something is better than nothing. Like investing $10 a week is better than investing $0 a week. Investing, you know, or a side hustle that makes you $300 a month is better than making $0 a month extra.
Yeah.
So
And it
to
can
me,
grow.
yeah, especially if you and then you invest that side hustle money and then
Yes.
it just
Nice.
accelerates there. Now you went from, you know, 10 pound to 300 pound and now, or 310 pound. And then, you know,
Yeah.
it grows even more.
Yeah, it's true. What's sort of your view and your personal like risk tolerance when it comes to investing? Because I guess there's an argument that at at our age, at maybe below 35, whatever, I don't know what the limit would be that people would say, but the risk should be quite high. And then it should maybe start slowing down as you get more towards retirement. However, we've both sat here and said that the majority of our money is in the non-riskier asset types, you know, the ETFs. So what's your opinion on that? Like maybe why wouldn't you go 100% in crypto when there's a bigger chance of reward versus being in ETFs?
Yeah. So, by nature, I'm not like a big risk taker just in
Yeah.
general. So, you know, we work hard for our money. You work hard for your money. Everyone in the chat works hard for the money. They go to their jobs. You know, we all
Yeah.
work hard for our money. So I want to protect it as much as I can while also growing it.
Yeah.
And so there's that teeter totter of risk of right, like more risk, more potential for reward. But the one that everyone forgets to talk about is more risk also means potential for more loss too, right? So you can go 100% into crypto, which is I know some people that have a lot of money in crypto, like 80% of their money in crypto or more. It's great, but you have to be able to swallow 80% down in a
Yeah.
year, right?
Yeah.
With like the S&P, which, you know, on the scale of risk, which is, you know, like no risk being like a savings account versus like ultra
Yeah.
risk being like crypto, you know, ETFs and equities like S&P is on the lower end of the scale, more
Yeah.
risk obviously than a savings account or a CD, but on the lower risk. I want to do what I can to find that balance of I want to sleep well at night because I don't
Yeah.
want to have to wake up and be, oh, my crypto portfolio is down 30% overnight. Like what happened? But also I want to put my money in position to grow over time. So you
Yeah.
take a little bit more risk than a savings account. And so it's finding that balance. And for me, you know, most of my money, like we mentioned, mine is in the S&P and
Yeah.
in ETFs. And I have like 16% of my money in crypto, which for me, I feel comfortable with. If
Yeah.
I could maybe do a little bit more, but also to me, it's like if I get more money in crypto, I feel, you know, a little bit restless at night sometimes. So, you know, so
Yeah.
I'll protect my risk and protect my money that way. So it's all about finding that balance.
And what
And
works for you? It's a really personal thing. Some people have a big risk appetite, and do you know what? If you can do that, then hats off to you. As long as you
yeah,
can sleep at night.
exactly. And you know, last thing here on that is from my side is like with you know, there's really two ways to grow your wealth fast,
Yeah.
and it's take on a lot of risk or and I say this and it's gonna sound like I'm not blowing over how tough this is, but or it's making more money.
Yeah.
You know, to have more money to invest. So like the one what a lot of people do is they try to take on a lot of risk, being like, I'm gonna go 100% in crypto, put my
Yeah.
10,000, hopefully in a year it'll turn into 1 million and I'm good, right? But like the returns you'd have to get is incredibly higher
Yeah.
than, you know, versus like, let's just say for me, I'm like, let me just focus on increasing my income and put a lot of money into S&P and get my boring 8% per year on
Yeah.
average, right? On average. And if I have $1 million, that 8% earns me 80 grand,
Yeah.
right? Versus
Yeah.
someone who has $10,000, for them to get 80 grand, they'd have to have like 1,000% returns, right? So it's
Mm.
like I'm taking on way less risk, but I'm going to focus on the principal side of things. To, you know, so I don't know. To me, I'm just not a big risk taker. So
Yeah.
what about
Yeah,
you?
I'm kind of the same, honestly. I'm not a massive risk taker, just in general. Like, comes down to a personality trait, really, doesn't it? Like, are
Mhm.
you someone that takes a lot of risks or not? And that feeds into investing. Therefore, most of my money is pretty, in safer investments. One thing that I'm quite keen to do is start increasing my risk a little bit. Like I said, going to introduce some more growth stocks into my portfolio. However, you could argue that if those are good companies, then maybe you're not really increasing your risk. There's arguments to everything. But yeah, I think I'm going to feel the best having the majority of my money in ETFs over the course of my life. So
Yeah.
similar to you, I think.
Yeah, and I see a comment. Someone says you can lose also with an ETF. Yes, like you definitely can. We're
Yeah.
not, we're not blowing over the fact that there's like we're not trying to say that there's no risk in
Yeah.
ETFs. And ETFs is such a broad term. Like
What ETF?
yeah, like right, you could do like a let's say like you did like a newspaper ETF. Well, you're struggling right now because newspapers in the last couple of decades have fallen off. But
Yeah.
so to me, when I say ETF, and maybe you're me too, like I'm talking about S&P,
Yeah.
broad market, large cap. And my take on that is if the S&P 500 failed tomorrow, that means Apple fails, Tesla fails, Amazon fails,
What is going on in
Facebook
the
fails.
world to do that,
Right?
right?
Like I'm
Yeah.
gonna go hide out in a bunker somewhere because I don't know what's
Yeah,
gonna
me too.
happen.
I'll be there.
Yeah. So like that's when I say there's still risk there. You can still lose money in ETFs. Even
Yeah.
S&P, we saw in 2022 the S&P was down 18%, 20%. Like it's
Yeah.
still possible, but your risk is a lot lower than going all in on one stock or whatever it is.
Yeah. And how do you lower that risk in an ETF? Well, you do it for a long period of time. If you started investing in 2018 and your timeline was 2 years and you had to have all your money pulled out by them 2 years ready to retire, do you know what? ETFs would have been the most risky thing to do. So would everything else at that time. And you probably would have lost a lot of capital. However, you understand that the stock market goes up and it goes down over time. It goes up, hopefully, and you stay for a long enough period that you see your money increase. And that's how, again, you minimize risk because you're in it enough time to ride out those waves.
Yeah, the great addition there on that point. I don't know the statistic, but it's like over 20 years, the S and actually this is true. Over any 20-year time frame,
Yeah.
historically, the S&P 500 has never lost money over a 20-year time frame.
Yeah. Yeah.
So, from like 1990 to 2010, 1991 to 2011, etc., it's never had a negative 20-year time frame. Doesn't
Yeah.
mean that,
Some years.
some years it's not like that's when people say like S&P 500 averages 10 to 11% per year.
Yeah.
It's an average. So 2022 was a negative 20. 2021 was a positive. I don't remember the number, positive. It's an
Yeah.
average. So it's not like it's a linear return of like 8%, 8%, 8%, 8%,
Yeah.
or like I said, be like 8%. It's like positive, negative, sometimes 12, sometimes 6.
Yeah.
So
Yeah. 100% agree.
Fast Eddie, he's in your chat. He's in one of my. He says, "Mr. Di, why don't you sell your Bitcoin and buy only VOO?"
Yeah. Why don't you answer the people?
I will. I
The people
am
who believe
bullish.
in that as well.
Yeah, I believe in Bitcoin. I'm bullish on it, and to me, here's how I see with like Bitcoin and the risk side of things. Like I've invested in money into Bitcoin that I say this not like saying I'm okay losing money because
Yeah.
obviously I
Yeah.
don't,
I
but
know what you
I'm
mean.
okay if it went to zero
You would be able to
financially.
feed yourself.
Yeah, like financially, I would be okay.
Yeah.
I wouldn't be happy. I'd be like, dang, I just lost, whatever, how much money I have in there.
Yeah.
But I'm not like reliant upon Bitcoin having to go up. So,
Yeah.
but I see a bigger upside than a downside. So it's just one of my risk things that I take.
Yeah. Just had a question on my channel. Adam. Hi, Adam. He is asking, I think, what are we both planning lightly to do once we actually are able to retire? So I'll let you go first.
Like with our money or just like with our time? Do you know?
I mean, I don't know. Answer however you like.
Well, I went golfing yesterday, and I'm not a good golfer, so definitely not gonna be golfing in retirement. But with my money, like I'll answer that because maybe that's what you're asking about. So for me, like I don't know. I'm only 24, so I don't know. Like retirement to me could be. I don't ever plan to like stop working.
Yeah.
I enjoy doing this. I enjoy helping. I enjoy teaching, etc. So I don't know if I can ever like stop until like anytime soon.
Yeah.
But when that time comes, hopefully the portfolio value is enough that the dividends, whether it's from VOO, other holdings, whatever, is sufficient enough to pay for my bills, and maybe even have more to keep investing. But that's probably my plan, but it could change tomorrow. Who knows? But to get there, it's just, I know what I need to do, which is buy every single week, buy consistently, reinvest, buy good companies, and just keep accumulating. Like you said earlier, hey, like accumulation stage, just focus on accumulating.
Yeah. Yeah. I'm going to answer this for myself in a second, but I just thought of another question for you that I'm just interested in.
Yes.
I know that in America, it's quite common to get paid like weekly or bi-weekly, whereas in the UK, it's way more common to get paid monthly. Is that why you invest weekly, or have you why weekly as opposed to put in the same amount in but monthly?
Yeah. So in the US, most companies will pay bi-weekly, so every other week. Usually like the 1st and the 15th, or every other week. You get paid your paycheck. I know some people that have gotten paid monthly, like some teachers sometimes will get paid monthly, weekly occasionally, but mostly bi-weekly or every other week. For me, so I don't have a full-time job, so my paycheck comes randomly, like from different things I do. So sometimes I'll get paid every month, sometimes I'll get paid on a weekly basis, sometimes it's random. So I just like the weekly for me to be consistent with it. Like it's like, hey, every Friday I buy live on my stream, but also just so like it's like a hey, end of the week Friday.
Yeah,
it's a good way to end the week. Markets open by and kind of end the week on a high note. So there's no really reason I buy like weekly versus bi-weekly. It's more of just like a hey, it's a weekly thing. It's almost like going to the gym, like I mentioned earlier. Like
it's like a habit now, which is
it's
amazing.
like a habit. Yeah, it's like a habit, and it's like going to get my workout in, but at the
stock market.
The stock market gym.
That's amazing. So what do I plan to do when I retire? Honestly, I don't want to just sit around because I think I would get so bored. But I would quite like. Have you heard of like barista F.I.R.E? You heard of that? Like the idea of, I guess, maybe I would quite like to maybe even work as a barista, but part-time, basically something that I don't need to do, but I'm doing it because it gives me purpose. It gives me community, whatever the reason. I'd quite like to get to that point. Whilst maybe still doing some stuff like this, that would be amazing, but it's a long time in the future. So I just don't know what that's going to look like. When I was thinking about this recently in terms of having a dividend portfolio with some ETFs in there as well that aren't primarily dividend based, whatever, I was thinking that it could make sense to hopefully have the dividends be able to pay for most of my lifestyle. And then if I need to withdraw a couple of % of the portfolio per year to add to that, then that could be a good idea. But yeah, I don't really know how it's going to look exactly because I'm quite far away from being able to retire off of my investment portfolio. But yeah, it's exciting. It's good to work towards that, to have an idea of, do you want to retire early? Well, maybe it's not the retiring early that I want, but I would love to be financially free. I think that's the important thing for me.
Yeah, I agree. I think a lot of people say, oh, I'd love to just wake up every day and go drink mojitos on the beach, right?
Maybe for a week.
Yeah, I can say I think most people would realize like after a week or a month or everyone's different, but I think most people would realize like it would get boring after a while. Maybe not. I don't know. Maybe you're not that person, like not you, but the viewer might be that one person that likes it. But I think most people will get bored or they would get tired of drinking mojitos. Someone asked in my stream, do you know what day of the week the market usually goes down? I will. Cherry. The market, I wish I knew. I guess I'll say that. I wish I knew. No one knows. I get questions a lot like, why do you buy on Fridays? Is that because the market goes down?
Oh, they think you know something we don't.
Yeah,
okay.
Newsflash, I don't. I know nothing more than in terms of when the market's going to go down. No, there's no, it could be a Monday and the market goes up. It could be a Sunday or not Sunday, like a Wednesday, the market go down. There's no like it goes down on Fridays versus it goes up on Mondays. I just buy on Fridays because, like I mentioned, it's like the end of the week. I want to, celebrate. Yeah, like a good week's worth of work to invest. But I wish I knew when the market went down. And if anyone in the chats know when the market goes down, please let us know.
Might not believe you though.
Yeah.
Yeah. Do you so you buy every week on a Friday, but will you also allow yourself to put extra money in on a different day if there's an opportunity there, or do you just really don't like the idea of doing that?
Yeah, so I buy like 98% of my money on Fridays, but I do like in one of my portfolios, I do Monday, Wednesday, Friday buys. Like
Okay.
so I do $25 Monday, 25 Wednesday, 25 Friday.
And is that into ETFs or is that
That's into individual
Oh,
dividend
okay. Okay.
stocks.
Yeah.
But honestly, I just do that because it's kind of fun to see how I bought on Monday and I bought. I mean, it really
Yeah.
makes no difference in that short time frame. And but if the market goes down, let's say it's like a Wednesday and the market
Yeah.
like tanks, 5% or whatever,
Yeah.
I'm not going to go buy more because, I mean, it's not going to make much of a difference
Because
long
of your time
term.
horizons. Yeah.
Yeah, like I'm actually posting a video tomorrow, like a video after my stream tomorrow. I'm gonna post it, and I talked about it last week about like unless you're investing like $1 million, buying a VOO, let's say, or buying VUSA, which I'm not sure the price of VUSA, but like VOO, right, is like $3.50 a share, give or take some money. Let's see, VOO is priced at 374. So
Yeah. I
374.
think Boost is like 60 something.
So yeah, so whatever, either one, like if you're buying $100 worth, right, and you buy it at 374 a share, or you buy it at 373 a share, because you're like, I'm gonna wait for it to go down $1. Over the course of 30 years,
Yeah.
it's really not gonna matter. And when you're doing that, you're trying to time the market of like, well, I'm gonna buy it at 373 versus 374. And there's two things there. Number one, it may never go to 373. So you're
Yeah.
waiting to buy something. Why not just buy it at 374 if you think it's going to go up?
Yeah.
And two, human psychology. Oh, it's at 373. I'm going to wait to buy it at 372.
Yes.
Oh, it's
Yeah.
at 372. And you're just going to push your buy target down
Until you miss it.
until you miss it. Exactly. And no one knows when the bottom is going to be. And
Yeah.
so for me, I'm just like, if the market goes down on a Wednesday and I buy on Friday, I'll just keep going down. Like maybe it'll keep going down. Who knows? So like, just because it's down one day doesn't mean on Thursday it's going to go down, and then Friday. So I'm even got at a better price than trying to buy on Wednesday. So I just keep it consistent every Friday because mathematically there is a difference if you buy at 373 versus
And if
374.
you trade, there's going to be a difference as well. But long term, yeah.
Yeah,
I see what you mean.
It will end up with more money. I'm not gonna like say like I get that, but waiting to buy like it I don't know. To me, just if you're buying something for long term, it's just be consistent, I guess.
Yeah.
Is what I
I'm
do.
excited to see that video. I made one that sounds, well, I don't know your video, but sounds quite similar to that a while ago. And exactly the same conclusions as what you've just said. I've got a question for you. I've just thought of it on the spot. This is a hypothetical situation. So whatever Colin is about to answer is not financial advice in any way, putting that out there. If you had to, you can't get out of this question. Okay. You have to answer.
All right.
If you had to put you had to liquidate all of your positions right now. Okay. And you had to put all of that money into one individual company, all of the money and all of your future money. Okay. So you're betting on just one individual company. What would it be? Not financial advice in any way.
Yes. No ETFs, like individual companies.
No ETFs. You have to bet on one company.
Can I say? Go ahead. Oh, I have like two. I have like a smart move and then like a degenerate one. Okay. So I know someone's on mine said Berkshire Hathaway, which I'm not gonna say that one because that's kind of cheating because it's like a conglomerate of other companies.
That's a cheat.
I'm not gonna like, I'm gonna do like individual companies. So if I had to pick a safer play, I would pick, there's a lot, but man, I could have like 5 answers, but I would say you
can change your mind later, but
but I'm gonna say Waste Management. So Waste Management is a US, I believe I don't know, maybe they have it in the UK. Waste Management, I'm not familiar.
I think we have similar companies, but I don't know if we have that one.
So Waste Management is someone said Costco. That was gonna be my second one, but Waste Management they own like 30% of the waste fills and everything around the US and the landfills, which is like what I like Waste Management about is the landfill side of things because a lot of companies use them because they're hard to get. And so mine would be waste management because the trash truck comes every week, no matter what.
Yeah, there's no getting out of that one.
Yeah, exactly. So I would pick waste management. And then my like degenerate one, if I had to, would be Tesla. But that's a little bit like, that's a little degen. But Tesla would be my. I'm bullish on electric vehicles, and Tesla has a bright future, in my opinion. So I would say Tesla. But if I want to play it safer and not be like crazy like that, I would say waste management would be my pick. But what would be your pick?
Tesla.
Tesla?
Yeah. I could think of a backup, I'm sure. But if I absolutely had to right now, it'd be Tesla. And for the same reasons as you, I think that Tesla is going to do wonderful things and lead the way in not just electric vehicles, but robotics with AI. And, I don't see them going anywhere anytime soon. I think they're just going to diversify their revenue, if anything. I'm not going to do that, but that's what I would do if I had to.
Yes. I'm not doing that either. But yeah, waste management. And okay, someone says in yours we have BIFA.
We've got BIFA in the UK for waste management. Okay, yeah, I guess it's just a waste management company here in the UK.
Let's see, management.
Have a look how their performance has been. I'm not very familiar with the company in terms of their performance.
BIFA? They're saying or for waste management. 5. Okay, yeah. I don't know if it's in the.
I wonder if that's the biggest waste management company in the UK.
I need to look. UK trash company market share. Let's see.
I'm sure people I've just had someone say belly pork. Great name, by the way. Isn't that a good name? Belly pork.
Belly pork, yes.
Tesla, Hayley, go girl.
There you go.
So people hate or love Tesla.
The leading waste management service companies by revenue in the UK as of 2021 is Veolia Environmental Services.
I've never heard of them.
That's like double the size of BIFA. BIFA's number 2.
Oh, okay. There you go.
So I don't see waste management, but the more you know.
Someone else has said, Walmart. That's a popular one. I'm sure that makes complete sense.
Yep.
Palantir, however you want to say it. What are your thoughts on them? Have you got any thoughts
on Palantir?
Yeah.
I don't really follow it, and I don't own it, so
okay.
I have no take.
Yeah. I don't know if you've seen his channel before, but there's a guy on YouTube called The Compounding Investor. I've just put it up on my screen. Fantastic channel. But anyway, he has said there tended to be a Monday market dip because bad news tended to be released at the weekend, but not sure if this is still such a strong effect these days. But I still tend to buy it on a Monday. So that's interesting. Maybe there has been historically a dip on a Monday in the market.
Okay. I think I might have seen that before.
Okay, yeah, I've not heard of that.
I just subscribed to the Compounding Investor, so.
Oh yeah, he's great.
So question.
Oh God.
Would you ever get a tattoo of an ETF?
Like you have?
Yeah.
When you say of an ETF, are we talking like just the ticker symbol? Like what are we talking?
Just
you don't want me to have like the chart and everything.
Oh no. But honestly, it looks like I have a chart, but it's not connected to the other one. But
would I? No, I wouldn't unless I absolutely had to. I would kind of like. I mean, I've got no tattoos and I've got no plans of getting a tattoo, but right now. But it would be cool to maybe have like an investing related tattoo because it's something I'm really passionate about. But I don't think it would be a ticker symbol. I don't know.
Yeah. Ticker symbol is kind of crazy. I kind of went a little crazy.
No, I like it, but just probably wouldn't do it myself.
I actually, so like whenever I tweet, like when I buy, I always say brick by brick because that's how you do it, right? Like you build a house brick by brick, you invest brick by brick. So I have that tattooed as well on my leg.
That's a good one, actually, because that's not like you wouldn't just know by seeing it. You'd probably question, like, why has he got brick by brick on his? And then they would ask you, and then you would tell them all about investing, you'd change their life.
Exactly. And every time I'm in the sauna at the gym, I'm always like, hey, they're like, what do your tattoos mean? I'm like, let me tell you.
Amazing. So you have 2 tattoos about investing or more? You keep uncovering them as this live stream's going on.
I mean, some of them are like kind of about investing.
Oh
But
my
they're
God,
not
I
like
know. Your
investing
whole
related.
back is a picture of Warren Buffett, isn't it?
Yeah. I got Warren Buffett on my back and Charlie Munger on my
Nice.
chest. So,
Nice.
yeah. And then I have Kathy Wood for ARK
Peter
Invest.
Lynch.
Yeah, Peter Lynch. Yeah,
Nice.
exactly. No, I just on my leg I have some, but they're not really investing related. But they all like one's discipline, which like you have to have discipline in investing. I don't have that. I didn't get it for investing,
That's
but
true
there's a part of
though.
it.
Yeah.
No, I'm not gonna show off the tattoos because I don't know how to
Oh,
do
people want you to. Belly Pork has just said, "How about a tattoo saying eat, sleep, invest, repeat?" So I've got a T-shirt.
Yeah, and a coffee mug, right?
Yeah. It says something slightly different, but eat, sleep,
Okay.
invest, repeat. I could get that tattooed, but it's quite a bulky. I don't know. Maybe like the first letter of each word.
Yeah, you could do like first letter of each word. That'd be cool.
Like hang on. ESIR. Yeah, no one would really know what that means.
Yeah,
Maybe a good
you get like really
conversation
small or
starter.
something.
Yeah.
Yeah.
Huh. Who knows?
Yeah. I'm launching a Dividend app in like a month, or sorry, in like in a week and a half.
Yep.
And if we
A
get
week and a half. Wow. Okay.
Yeah, March 1. If we get to 10,000, not if, when we get to 10,000 downloads, I'm going to get a tattoo of the app. So
Where? How big? We need commitments here. You heard
right
it first.
here
Perfect.
on my forehead.
I will go out onto the street and I will force people to download.
I'm gonna get the QR codes. They have to. No, I'll get
The
on my
one way
leg.
to do it.
Yeah, get on my leg. So just like a little remembrance of the work.
This is funny. Compounded Investors just said, "I'm buying shares in tattoo parlors on Monday."
You should.
Yeah,
Now
Colin's going to make you a millionaire.
Yeah. You can make a video about it. That's
funny.
Any other, like what I don't know. We've been going for an hour and ish. So what is like if someone came up to you, Hayley, and said, "I've never invested before. I don't even know what investing is.
Okay.
But I want to learn." You give me one piece of advice that I need to go for. Like, what is one thing I need to know advice-wise when it comes to money, investing, personal finance, whatever it may be? What's like your number one tip? It could be like it could be a compounding sentence. So it could be like 2 sentences in one, but
just add it all together.
Yeah, just never stop.
Yeah. I mean, you can go first if you have one whilst I think.
Okay.
Otherwise, we could be sitting here watching me like this for the next minutes.
My biggest piece of advice for people just starting out, or even not even just starting out, just in general, is no matter how much money you make, it doesn't matter. It matters less about that and more about what you do with what you make. And so my piece of advice, like continuing on that, would be, it doesn't matter if you make $50,000 or 50,000 pounds, or if you make 200,000 or 250,000. What you do with what you make is what is important. And always focus on spending less than you make, and focus that money into an emergency fund. Once that's funded, invest, buy assets. If you don't know where to begin, like go something broad market and just like keep investing, because it will never, compounding doesn't work with $0. You need something to go in there. So even if it's just like we were talking about earlier, $10 or £10 a week or a month or whatever, you just got to go to the investing gym, and then you get better and better and better. And so I think Dividend Dave said this when we were talking. I went on his podcast and he says, just get on base. Like just get on base, put some money in the market. And that's the way to go. So that would be my long-winded piece of advice.
Yeah. I mean, there's many avenues I could go down here, but I think an important thing is that, you don't have to be an expert to start, and you don't have to be able to necessarily analyze balance sheets and do all of this stuff. For sure, if you want to get into individual companies, yeah, it's going to be good to know that stuff. But if you just start learning about the benefits of investing, but that's your interest, like you don't want to know anything else, you don't want to spend hours looking into companies, you don't want to do all of that, then that's okay. You don't have to be an expert to actually be able to invest. And it's like that thing with, you don't have to be rich to invest. You also don't have to do what we probably do, and most people on the chat, where we actually do spend our spare time looking at investing because we have an interest. Just find something that you understand, learn what an ETF is, learn that it's a basket of different stocks, and just leave it there. If you don't want to look at individual stocks, you don't have to. There's this big,
Yeah.
I think a lot of people get very fearful of investing because there are things about investing that can make it very complicated. You could throw all these different ratios at them, all these different things that you can look into, but it doesn't have to be that.
Well said. Well said. It is confusing, but it's also doesn't have to be.
Yeah. Yeah.
Fast Eddie's in your chat, who's one of my viewers. He's now all in your chat, so Fast Eddie has left me now. I'm just kidding. He says, he says, I want you both to tell me where the market is in 20 years. And I don't want to hear, I don't know. We have to take a guess. Where the market is in 20 years.
The market, like just in general?
I mean, in 20 years, we can't use we can't say history will repeat itself. But like I mentioned earlier on stream, in every 20-year rolling period in the history of the S&P, the market has never been down. So I cannot say with 100% certainty, but I can say with very strong confidence that I don't know where the market will be like in terms of a number, but it will be up. I can say that with very strong confidence.
Yeah. And you know what's funny is that because we make videos online, we do have to protect ourselves and say things like, past performance is not indicative of future performance. And it's absolutely true. And, not financial advice. These things we have to say. Maybe if I was talking to a friend casually, I would word it slightly differently. So it always makes me laugh when I say things like this. But I don't know. However, if I had to put money on it, I would just bet that it's in a better position than it is today. It's higher than it is today. Don't know where. Yep. Somewhere higher than today.
Yeah, one of they're taught in like financial services to say the market, generally speaking, goes up. So generally speaking, if the market goes up, then generally speaking, the market will be higher in 20 years than it is today.
It's funny.
But that's the thing about investing is it's always a look back, right? So like, in 2008, people didn't know, like I was 10 years old, so I didn't invest, but people at the time like didn't, you can't be in the middle of 2008 and be like, the market's going to go up, right? Because like, you just don't know. There's no certainty. But looking back, it did, right? 2000, same thing. When you're in the midst of it, you can't say market's going to, you can say that, but like, we don't know if the market's going to go up. But when you look you look 5 years later, 7 years later, the market was up, right? Yeah. So market's always, the future is unknown about anything investing. That's what makes it kind of scary for people. But if we look at the history, generally speaking, the market does go up.
Yeah. And that's exactly what I would say if I had to. Someone has said, I think this is about Eddie. Yeah. Fast Eddie has joined the dark side, which means that I'm the dark side and you're not. So congrats.
I'll take it. Thank you, Factions Guru, for letting me know.
That's funny.
Oh, Fast Eddie says, my guess will be the market up and Bitcoin will be gone. Uh-oh.
Oh, okay. Interesting. Yeah, I feel like it's really binary with crypto.
Yeah. I think crypto and Bitcoin are separate of each other. Like, I don't think Bitcoin is a crypto. I'm not saying that, but I'm saying like in terms of like, I don't think every other cryptocurrency touches Bitcoin.
Or will be around. They're not all going to be around.
Yeah, like if you look at the top 10 crypto 5 years ago, 7 years ago to today, by market cap, it's like it's not the same. So I don't know. I hope Bitcoin's not gone because I'm in on it, but like I'm not in on it. I'm like invested into it. I'm not Satoshi. I am not Satoshi. But obviously I don't want it to go down, but who knows? I think it's just a bet.
Yeah. Do you want to, I've just seen Tommy's just said here, buying property in my 20s worked very well for me. Do you like, for me, I really do want to own a property, multiple properties, and make money off of those properties. Just in the UK and everywhere, I guess the housing market's not been great. It's been very difficult to get on the property ladder. Do you want to also get on into property investing, or are you of the mindset where you would like to own your own house and kind of leave it at that, and you don't really want involvement?
Yeah, I mean, I'm not against investing into real estate and owning real estate property. I am against the 3 a.m. phone call from like, oh, the toilet broke,
Yeah,
or we need a new roof, or we need a new AC unit. So I'm not against it. I know it's a very strong wealth builder for a lot of people.
yeah,
I just, from where I am, like right now, like with my own life circumstances, it just doesn't make sense for me to
yeah.
um,
I suppose you could pay
get
someone to
property.
manage it if you look at it like that.
Yeah, you could definitely do that, but you're exactly right with the housing market. It's just crazy
Yeah,
right now. So if I were to get into it, I'm not
maybe
gonna.
not
It would.
now.
Yeah, just not right
Yeah.
now. Yeah.
Yeah. Yeah, that's a good point. We should probably start wrapping it up soon. I'm sure we could talk, like, I know I could talk to you for hours about investing, but just conscious of us being on for a while.
Yes.
Um, how should we wrap it up? What should we do?
Everyone in my stream, go to Haley's channel,
That's very
subscribe,
kind.
go to her
Likewise.
Twitter. Yeah, go to her Twitter and follow her. And yeah, I mean, thanks everyone for joining on Sunday. I usually don't stream. You usually do Sunday streams, don't you?
I do, yeah.
Yeah.
Yeah, this is my common time for a stream, Sunday evening. But you're more of the first thing in the morning type of guy, right?
Yeah, Monday through
Yeah.
Friday at
That's impressive.
US market open, I stream for like an hour, and
Yeah.
so I don't ever stream on Sunday, so this is like abnormal, but
Well, thank
uh
you.
yeah, no, it'll be good. And then tomorrow, even though the market's closed, I've been coerced by my community to stream tomorrow, so I'll be
That's
streaming
funny.
tomorrow,
Yeah, you've got
even though
public
the market.
holiday, right?
Yeah,
Yeah.
we have Washington's birthday, so
Okay.
one day we're gonna get Warren Buffett's birthday as like a day off the
That'd be
market too.
nice. Yeah.
You, you never know, possibly, but um, yeah. What's your parting piece of advice for everyone?
Well, firstly, I would like to reiterate what you said. Everyone that is here on my channel that has not ever come across Colin's channel, go and check it out. Go and subscribe, and go and search him on Twitter at the Decade Investor, or is it just Decade Investor actually on Twitter?
Just Decade Investor.
Just
Yeah.
Decade Investor.
Yes.
Very, very active over there. And if you're struggling with motivation in investing, give his page a follow, and he will motivate you every single day to carry on investing. But yeah, thank you everyone for joining this live stream. It's been really, really fun, and we'll do it again if people want it. I've got a video coming out for my viewers that are interested in just over half an hour, so 6 p.m. GMT. It's all about, you probably heard of it, Colin, actually. I'm not going to ruin the video, but basically Coca-Cola investors in a town called Quincy in Florida, or like a lot of them became millionaires for investing in Coca-Cola. So I made a video around that and like what we can learn from them as investors. So check that out. But yeah, it's been really, really fun. And it's always nice to just talk to someone that is also interested in investing.
Yeah. Likewise. That's it for me.
Yeah, cool.
Thanks.
Well, thanks everyone.
Yes. Take care.
Bye-bye.